This is the Daily Market Comment by Rafi Boyadjian and Maria Pachordavis. Thanks for joining us at xm.com. The European Central Bank kept worries of burgeoning inflation aside on Thursday, as it reiterated its previous forward guidance that asset purchases will end at some point in the third quarter, while providing no precise timeline of when it will start to raise interest rates. It seems that the ECB still wants to keep its options open about how soon it will lift borrowing costs, given the uncertainties with the situation in Ukraine. The euro nosedived after the ECB statement, briefly dropping to two-year lows. According to ECB insiders, governing council members are converging towards a Q3 liftoff date, likely comprising a 25 basis point hike. But the euro is wallowing around $1.08 today as the US dollar regains its positive momentum. The greenback looks set to end the week on the front foot after Treasury yields soared yesterday. The dollar index has edged up to around 100.45 in the last 24 hours, with renewed yen weakness providing an additional boost. Slightly softer than expected retail sales numbers out of the US on Thursday haven't caused much of a dent in the dollar, despite some indications from the report that high prices might be starting to curtail spending. The Canadian dollar is a little firmer today, finding support in higher oil prices. Both WTI and Brent crude futures are up more than 2% on Friday, extending this week's rebound. Oil is on course to post its first weekly gain in 3 weeks, having been bolstered by a partial easing of lockdown restrictions in Shanghai, China. But in a further boost for the commodity, the New York Times has reported that the European Union is considering phasing out the import of Russian oil. Asian stock markets closed lower on Friday following losses on Wall Street yesterday. Worries about supply chain disruptions hurt big tech stocks such as Apple and Tesla. Meanwhile, the mixed run of earnings releases was a drag on all of Wall Street's main indices. The Nasdaq Composite fell the most, likely additionally pressured by the rebound in yields. Trading is expected to remain thin for the rest of the day, as well as on Monday, as U.S. markets are shut today for the Western Easter celebrations, and most European markets will not reopen until Tuesday. This was today's Daily Market Comment. Thanks for joining us at xm.com.